So, go through some prep here. Monday morning. The most important aspect, obviously, of this week is it's Fed week. You get the announcement on Friday, the announcement on Wednesday, which should dictate, either continuation to the upside in this market or maybe a little bit of liquidation into stronger areas of potential buying. As I'm watching and looking at my, daytime frame profiles, it's the same thing over and over again, right? It's nothing new. You tend to get these liquidation moves into support, and from there, value just gets chased up higher as price is moving to higher levels, and that's just what you're seeing again here, right? We get the liquidation, you get a big gap down. This came right into support. This also had the 50-day sitting on it. You find, strong buying there, and from there, the rest is history. You get squeezed out on the shorts, and value continues to build higher as we continue this move up. The same process, which is, they continue to leave very poor structure behind, but keep in mind, this poor structure has been a theme, right? Every time that they break this market, they build it back up with extremely poor structure. So it's not really anything I'm super, super worried about at this point. Obviously, it's always in the back of my mind that, if the market finds a catalyst, which is, in my opinion, the only way the market's going to, drop lower, which is kind of the, basics of when markets sell off. If it does find a catalyst, there'll be nothing really sitting there ready to catch it. So that's kind of why I'm paying attention to structure. But from an overall standpoint, the market's just aggressively being bought up. Which is going to leave poor structure as you continue on. So moving over to the ES here, Friday was an interesting day to say the least. Really strong trend type move to the highs. You only stop one time frame in the one time in L period where, you liquidated down, and then, strong rally in M period. One thing that I do find interesting about, failed spike attempts is they respond more almost as a blow-off attempt, whereas it's trying to trap late buyers entering the market at poor positions, and has the potential to see a short-term reversal take place in the market. Now, with that being said, I drew this line here. This line's a box, but this level here as, being the initial area of support. And I mean, it's pretty clear what's happened there. When we broke above it, we were able to find support. And again, in the Globex session, we once again found support there. So as far as Globex goes, it came back through and cleaned up a lot of this poor structure here, and maybe got rid of a lot of these, late buyers in the market, and finished as of right now as an inside Globex 2R move on Friday. Now, I had mentioned, I think it was 2 or 3 days ago, that the one thing I've found very, very interesting in this market is Globex does not seem to be the aggressor right now. It seems to be the pit hours is the aggressor, which is a little bit of a difference from what we're used to seeing as far as Globex making the majority of the moves. Now, there's charts you can pull up. I don't have one right in front of me that will show you, Globex is generally the mover of the market. So that's something a little different that we're trading in right now, where you have so much new money, I believe, coming into our current market in the real-time hours. That we're actually the aggressor. We're actually the aggressor market, and Globex itself is more acting how the RTH used to work, where you got more balance, you got a lot less trend, and more, indirect volatility in a way. So coming into the ES, I'm going to monitor obviously 76, 78 area first and foremost for any downside move for potential trap of sellers if they don't enter the market, and then of course our all-time high at 44.08. Like I said, it is a Fed week. So, it used to be the process on a Fed week that you would get really tight range balance. You wouldn't get much movement. But over the past, couple announcements here, we've had trend-like days. We've had trend-like weeks leading into our announcement. And then the announcement hits, you get the increased volatility. And then you finish the week off kind of in balance, which is what I would expect to see most likely again this week. So, trading in and around the range and the levels of supply and demand, your support resistance is going to be very effective coming into this week. Again, do I love ES where it's trading right now? Not really. I really just don't. I find it's really, it'd be nice to get one red day to kind of bring some confidence back into the long side for myself. I'm not saying, being long is wrong right now. Being long is obviously the most right aspect of this market, is to potentially look for and execute when the market gives you an opportunity on the long side. Just for me, from a personal standpoint, I don't like chasing the market, especially after such a strong recovery off the 50-day touch. Any kind of pullback towards the 21, I'd be very comfortable buying, especially if you get even deeper pullbacks. That's more comforting for me. But like I said, being a Fed week, it'll be interesting to see kind of how we trade today and tomorrow, and then leading into the Fed announcement on Wednesday. Now, when I take a look at NQ, I'm going to sound like a broken record here, but one thing that I am aware of and pretty consistent with NQ is each and every time we get above this upper channel, and I've said this before, NQ really starts to lose enthusiasm, really starts to lose the juice. So what I'm looking for on NQ is a retest of that. I'd bring it just below the 5,000 number, 4,900, somewhere in that range for a potential long opportunity for continuation. But again, positioning into the Fed is probably the worst idea you could ever come up with, unless you're extremely hedged off. And again, chasing NQ after such a strong recovery is just not in my strategy. So I'll monitor today to see if we get any kind of downside movement for a potential long opportunity. Otherwise, if it continues to go higher, I most certainly do not want to fade the market, even though, and I know NQ really struggles up here. Keep in mind, we have blown away from this before prior to getting an aggressive drop lower. So trying to time that short is not a great idea in my opinion, and it's not something I want to do. So I'd much rather just allow NQ to trade through, see if we can get an opportunity for potential long. And again, it'll be interesting to monitor NQ coming into the Fed and seeing exactly how they want to trade it out. Now, NQ was super aggressive on Friday, but it was less aggressive in the later stages of the day. But it's been kind of the aggressor market. It's kind of been in its own world in a way, as far as NQ or R2I, ES, the Dow have all kind of traded in unison together. Maybe not identical profiles, but they generally are moving with each other, where NQ seems to be moving exact opposite of those three. So, something to watch is to see if maybe we start getting that rotation back into small caps. Let's see in R2I and NQ pull the rotation again. Otherwise, like I said, somewhere in that 4,900 area, which would be somewhere up here, just below Friday's low, potentially coming in somewhere around our point of control from the 22nd. Maybe the best opportunity to potentially get long. I think there is an opportunity to fade this market if you just can't not do it. Like I said, that's not on my trading plan for today or this week. But I think there is an opportunity if you fade against Globex's high, based off the fact that, very structurally poor high left on Friday, added in, the real failed rally early on in Globex to the fade. Which gives you a pretty guaranteed out as far as risk reward goes. So if you're looking to fade NQ, I think you can fade it against Globex high. Like I said, it's not on my ticket for today. Fed week is an interesting week. I like to trade Fed week. I like to trade before the Fed announcement, and then once the Fed announcement hits, just walk away for the day. But I'm not in the camp where you have to sit back and not do anything and just stay stay flat throughout the week until the announcement happens, and trade like a maniac once the announcement happens. I'm kind of opposite of that. I think the market's still going to trade. I think we have a pretty good idea on how the market's going to trade. And if you use, the structural references, I think you can have a very good week leading up to the announcement, and take a long weekend if you want. Taking another look at R2Y. So R2Y, I'm still looking for that full rotation back down towards 2160. I don't know if we're going to get that full rotation. They have, in fact, sold off from that 21-day moving average, which was something I was looking for. The Globex session obviously tried to push it a little bit lower, 2180. That kind of seems to be the trampoline at this point on where they're not willing to allow the market to go lower. So that's still kind of what I'm watching for in R2Y. See if we get that 2160 test and then a potential reversal up to 2320. Now, the Fed could put a wrench in all that, given the fact that I'm sure they're going to have to talk about inflation. There's no way they can't. But with that being said, do you expect, Powell to come out and say, inflation's getting out of control and there's nothing we can do? Of course not. That's just unrealistic. So I wouldn't lose too much to that thought process that there's going to be something ultra negative coming from the Fed. I think it's just going to be a lot of the same, language being used about tools, and we still have many and blah blah blah, blah, so on and so forth. So I wouldn't get too short bias or too long bias leading into the Fed, but rather stay neutral and just see kind of what kind of language they use. Like I said, I would be shocked if it's anything but what we have seen. So as I'm watching R2I here, they're finding resistance here in this 022210 level. Not surprising, expectations were set. That's exactly what I was looking for. They're just having issues pushing back into 2160. Now, the majority of the profiles, including the Globex sessions, have been built below that 2202 level, which tells me if they can break above it, this could be an aggressive rally very quickly, because there's going to be significant stops up here. There's going to be stops placed, which will allow the market to rally potentially up to 2244, which is my next stop. Likewise, if the market does fade a little bit, like I said, 2160 is my go-to for potentially getting long the market and seeing if they can then rally back up, take out these stops and go. I am still neutral bullish on R2I until it breaks below 2160 and finds actual confirmation of lower prices, which the market just hasn't done yet. So as far as R2I goes, I think it's the most tradable market again. I think it's in the best areas to trade. It's away from its all-time high. It's potentially looking to get back into balance as far as the larger balance range goes on the day time frame. So I do believe R2I is going to offer up the best opportunities leading into Monday, Tuesday, and potentially early Wednesday prior to the meeting. So it's going to be the market I will focus on the most this week. Now, just a quick look over at the Dow. Again, I don't love the Dow where it is. I think it's trading a little bit sporadic for me at the moment. But it is still mechanically working, right? You're still getting support off the 520, 540 area. They're still having issues finding a new buyer above the 840 area. I think if the Dow can find a supportive bid above that 840 area and take out Friday's high, I think that plays well for R2I to continue a rally and potentially ES to continue a rally. Any breakdown below that, we do know that buyers are sitting down here at the 520, 540 area with a nice backstop sitting there at the 360, 400 area. So, I think there's a lot of pressure for the sellers to actually make something happen significantly in the Dow. And we have some pretty good structural references to go off of. I think if the Dow does liquidate a little bit, I think it becomes a little bit better trading environment. But for right now, I don't have the Dow as being a potential area of interest for me, but more a market to use to monitor R2I as it continues to either rally or fail to rally. So that's where I'm at right now. That's where I'm at coming into today. R2I is going to be my focus today. I'll monitor the other markets as always and see if we get any kind of pullback across those boards. But with that being said, I will see you guys again tomorrow. Keep in mind, the profile series was announced. If you're interested, feel free to sign up at my website, tradeuptradingroom.com. All right, trade well, trade safe, and I will see you guys tomorrow morning.